Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, July 10th, 2019. It's about 10 o'clock Eastern as I'm starting this video, and I did a video update on some short trade ideas the other day, and I wanted to do, as I said I would, follow up with my watch list of long trade ideas. So we're going to get into those. Before I get into the ideas on my watch list, I just wanted to reiterate, I always mention this, I highly suggest both silver and gold members come into the site from time to time. If you're a member, you should be getting the email updates, the premium email notifications, meaning every time a new post is published, an email goes out. Now, two things to that. Number one, the posts that have multiple chart images, we're going to go here for a second, gold, US dollars. If you have multiple chart images, that's not in here. What did I want to show you here? Hold on one second. Okay, well, here's one example from yesterday. The charts I'm watching today, if I include, sometimes there's up to 8 different charts. This is called a gallery format, where you click the first one, it'll expand. I'm using a scroll wheel now. You can zoom in, pan it around, do whatever you want. Once it's expanded, you can see a little arrow over here. You don't have to click that arrow. Just click on the right side of the anywhere on the right side of the chart, and it'll go to the next expanded chart. There we go. So that just went from NQ to ES, and then it'll close. Now, so number one, when you get these emails, if may not see some of the charts in there, because again, if it's just a single chart, do we have a single chart here? No, we don't. But if we do, then it'll show on there. The other thing I wanted to show you, and the reason to come into the site, once you log in, the home page, then it's not the same home page that non-members or non-logged in guests see. Gets rid of all the fancy, images and all that other stuff. You click home when you're logged into the site, and you come here. This is the home page, or we'll call it the blog page. And that will show you all the posts, and you can see down here which ones have comments. So yesterday we had this, did the video, an extensive video on gold, the miners, the US dollar, all the other precious metals, and you can see there's 6 comments down below. So if you come in from time to time, and there may be another 2 or 3 comments added today. It all depends. Some posts you start to get a lot of questions, and I think some great questions. I would ask that you try to keep it on topic. I answered this one. REMX, that's rare earths, somewhat related, and they're not precious metals, but they are metals, and they're mined out of the ground. So somebody asked an update on REMX, which is there. And then follow up, and the reason I'm doing this right now is because a lot of times I'll share trade ideas here on the front page underneath one of those posts. So I may do an update in the morning, charts I'm watching, then I follow up later on with some additional charts, or I get questions. For example, somebody last night was trading the miners and recently took some profits and asked if I could suggest some swing trades for gold stocks that I like 12 months or out or more. And I made mention, as I did in the video, that silver is quite likely going to play a game of catch-up if and when the next rally starts in gold, and it could possibly outperform. Whether it outperforms or not, I mentioned that, hey, don't just look at gold stocks. Everyone loves gold stocks, GDX. There's also the silver miners, and some of these silver stocks, I love trading them because they can really run. So what I did here, and why I'm sharing this now, is I went through one of my watch lists on the silver mining stocks because I think they'll play a game of catch-up. These are all weekly charts, and you can see the charts. There's FSM, Fortuna Silver Mines, and these are big gains if and when these stocks hit that. So just leave it here. You can see some of these stocks are long-term trade setups, and now the buy signal on those or a confirmation will come when silver breaks out of the downtrend line that I focused on yesterday. So if you start to see silver and gold move up, then these guys will most likely follow. And I just wanted to again state that if you're looking for trade ideas, this is not where you're going to find them all. 90% or more of the trade ideas on the site are posted here in the trading room. I'll post those in response to questions I get, or on the swing trading group, and then the remainder, all the official trade ideas, are always on the front page and under here on the trade ideas. But you can also go here to unofficial trade ideas as well. They're not all there. Again, these are only ones that make the front page. These are only ones silver members can access. Trading Room has the bulk of the trade ideas, and then you have these, or you can go to the home page again, like those 4 or 5 silver mining stocks I just mentioned happen to be buried here in the reply section. And I'll probably follow up on those later, but maybe not. There's a lot of stocks. I follow hundreds, if not thousands of stocks. Sometimes I'll post a trade idea that plays out great, and it just fell off my radar, and I may not follow up. So, all right, enough of that being said. Let's dive into the charts now, and I'll go over some that do stand out at this point in time. This one I've mentioned in the past recently, LIT. It's the lithium Global X Lithium ETF. This is a weekly chart, and this chart it speaks clearly to me. I see that was an erroneous spike right there. You don't see a candle like that. That was probably one false print that went down there. So you essentially had this divergent low right here. Again, on a weekly chart, divergent lows take usually months to build, sometimes years, and they lead to the big trend changes. So in early 2016, we put in a divergent low in lithium stocks. From there, and this is again just an ETF, not an individual stock. So this is your diversified. It's a basket of different lithium stocks. Rallied 140% over the next what is that? 2 years or so, and then came full circle, put in a nice clean divergent high. You can see the negative divergence down here on the indicators, and I don't know if you can make it out. You should be able to, unless you have you don't have a a decent monitor, but my volume bars, I have them turned down. I don't like busy charts. So I don't have the colors really bright, so they're kind of a light gray color. But you can see this is what you might want to look for on a stock or the market topping. It's what we call a buying climax, when you see a security rising. All of a sudden you see this, a sharp push up at the top on a much higher volume, increased volume. Likewise, you can look for that too. They have what we call a selling climax. If you were to see, let's just say, we'll use this lithium as example, we have a sharp plunge down, capitulation. The sellers capitulate, or the longs capitulate, and then you get a reversal. And if that occurs on above average high volume spikes, then that's most likely a selling climax. And the point is, those mark significant tops and bottoms, major trend changes, and you don't always get them, but they do help to confirm other technicals such as this, the divergent high, the bearish engulfing candlestick that came there, the trend line break. I mean, there's those are 3 different things right here that clearly spelled top in the lithium stocks back then. Okay, with that being said, once again, you do not have to have selling climaxes and buying climaxes to mark significant tops and bottoms. It's just one of additional supporting evidence. If you do get it, helps. So lithium, this is again a weekly chart. If you take a look here to the left, we're going back to 2013. Look at all the reactions on this line right here. Here's my support line. Support level about 25.50-ish, and I just see a lot of reactions. The stock has behaved well off this level. It was resistance when below, get above it, it acts as support, broke down below again, and support once broken becomes resistance, 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 resistance once broken becomes support. Simple stuff. This is technical analysis, and that's how it works. So now you have a stock that has fallen down. You cannot argue that's not a significant resistance level. I can't guarantee you that it will hold. So what happened here, we overshot it briefly, and back here you can see some brief overshoots, and we recovered it. So essentially we have lithium at long-term support on the weekly chart with positive divergences in place. Another thing you want to look for, obviously, you can see the downtrend line I have. Should the stock reverse and break above the downtrend line, that would be bullish. And you can see the red line here. This is the 40-week exponential moving average. You can see in a downtrend it caps it. It acts as resistance. Once the trend changes to bullish, it acts as support. Once it breaks, you're in a downtrend again, and it acts as resistance. So it's nice that you have both the downtrend line and the 40-week coming in exactly at the same place. By the way, that 40-week moving average is the same as a 200-day moving average if you're on a daily chart. So that would be a powerful longer-term buy signal. So right now I'm just on the lookout for the charts to firm up. That's a weekly chart. Daily chart, it has some work. You have some divergences. Again, I pointed this out recently, and you can swing trade these divergent lows, but that weekly chart is setting the stage for a much longer, a potential trend trade. And just like that weekly chart, you know, swing trade, look for these divergent highs that are bearish, and that divergent high really started off this larger downtrend bear market that we've been in since. But like I like to say, even in a bull market, there's short trading ops, and in a bear market, there's bullish trading, long-side trading ops. You had a nice little wedge here, divergent low, boom, set up in a rising wedge. It was your next sell signal. So again, you look for these divergent lows, and each of these were probably double-digit swing trading ops right there when you had the divergent lows. And right now, we have a pretty big one forming there. PPO is curling over, turning down right at the zero line. That tends to act as a resistance. So like I said, I'm not crazy about what I see on the daily chart, so this one's not very actionable for me at this time. If you're a long-term investor and you want to take a shot at that long-term weekly support, you probably want to give it some room here. That may work out for you, but again, this I can't nail down a specific high probability entry on this one right now. I need to see a little bit more happen here. If it took out 2640 or so, there's some resistance there. That would help. And obviously, then if it went up here, you have a price resistance at 2755 plus a downtrend line. That would be a pretty solid buy signal. That might get us above that weekly. That might be the same as that weekly trend line I was using there. And of course, that would be a more powerful buy signal. So I'm laying this one out in case I don't follow up and the lithium stocks start to move. But as always, if you're a member of the site, just bump me if you want an update on it. All right, a lot of time spent on that one. I probably won't do so much on the rest of them. I'll just run through these real quick. These are unofficial trade ideas unless I say otherwise. RAD, Rite Aid. Oh, and again, there's a big difference between an actionable trade idea, I'll try to specify that, whether it's official or unofficial, and a trade setup. Lithium is more so a trade setup because it really hasn't triggered any buy signals. It's fallen to support, and you can take a shot at support, but it hasn't triggered any buy signals such as a breakout of the downtrend line or any type of bullish candlestick reversal pattern. Rite Aid, RAD, has broken out recently. I shared this chart in the trading room the other day. Somebody was interested in shorting it. I said, look, to me, I like it as a, you know, I think it's a potential long here. I have this downtrend line, as you can see, and I had this smaller wedge pattern here. So it broke out of the wedge, had a divergent low, which I like to see. There's that bullish positive divergent low. Broke out of the wedge, had a very impulsive move up, hit this secondary trend line, pulled back and consolidated, and has moved through here. The only thing that I'm not crazy about, and this is why it's still not an official trade, it's not acting, once it broke out above this trend line, which by the way is not a very well-defined trend line. I should probably even clean it up a little, move it around. But it's not moving up impulsively higher anymore. Let me tighten this trend line up. This is, I think, a better fit because now I have 3 reactions. But it has some price resistance here. I wanted to show you. I should have had that line on there right about here. You can see this reaction high, 1, 2, 3. So pretty much, I'll make it clear, this is a setup now. I might make it official. We'll see what happens with the market. I want to see what happens after the pop in the futures this morning. See if that sticks. It wouldn't surprise me in the least if it was faded. I already shared my thoughts showing you that any new high in the markets will be a marginal new high. So I'm watching this one. But let's say about 960, 963, if you want to be safe, 965 on Rite Aid. That'll take us above these previous recent highs it's been tapping on. And then you can see my potential swing targets there. That's RAD, Rite Aid Corp. UGAS, I've been highlighting quite a bit recently, making the case that the daily charts on natural gas futures are bullish, and that's a position, a core position I have personally now, and it continues to pan out pretty nice. And you can see on UGAS, the 3 times ETN, you had this downtrend line taken out. You also, just like natural gas futures, you had positive divergence here, divergent low in the daily time frame. And again, nat gas futures I've been updating quite a bit. So I know a lot of you ask, you don't trade futures, and so therefore I'm showing this is one of the proxies if I were to trade in ETN. You know, this is one that I like. It does well. And it has leverage, but then again, natural gas futures do. They're even more leveraged. You just have to keep your position size small. When I hear people getting wiped out on these 3-time leverage ETFs, it's because you're not factoring in A, the 300% leverage factor, and B, if you trade something like natural gas, this is about the most volatile commodity I know of. I've traded natural gas for years, and on more than one occasion, I've seen it go up or down over 20% a day. Not UGAS. I'm talking the natural gas futures, the price of natural gas. So 20% rises and dips in a day aren't very common, but they're not. I've seen it quite a bit, and 10% plus, 5% plus up and down days are very common in natural gas. So just keep that in mind when you're trading something like this. And how do you get around it? Keep your position size smaller, at least a third, if not less, of what you might normally trade on something like SPY. All right, let's move along a little faster. SATS, EchoStar Corp, satellite dishes, and we have resistance here was at 43.34. I've had this one on my watch list for a while. And let me move that line up a little. It should have been tighter right on these reaction highs. It already broke out recently. So it's a breakout. It was a breakout there. Maybe if it comes in a back test, that would offer an objective entry. You'd also put an uptrend line here. So that would be, you could also take it here. It's already broken out and just, it's a trend trade. Just keep, let it run. I'd have to add some targets, which I haven't done here, but you can see some reactions here. You have a reaction high here. I'll have to sharpen my pencil on that, but you have an uptrend line, like I said, and support not too far below, which it just broke above. So any pullbacks to that level would offer an objective long with a stop not too far below. Likewise, if you take a long here and you give it a little room, I wouldn't let it go much below that 43.77 / intersecting uptrend line level, because that's dual support levels. It should hold on a pullback, and if not, stock's probably going lower. BGFV, let's see what that is. Big Five Sporting Goods, bullish falling wedge pattern, positive divergence. This is a trade setup pending a breakout. Ideally, you want to see a breakout impulsive, meaning a big green candle, not just limp through there. You want to see it on above average volume. Ideally, I like to see 1.5 times or better daily average volume. You can get the average daily volume from your brokers. They usually quote either 60 or 90, sometimes 100-day average volume. First target would be there about 224. Be careful. When you see a stock under $5, stock that looks like this, bankruptcy filing is always a possibility. I don't know the first thing about this company. I've not done my due diligence, and I'd recommend that. So just keep that in mind if you play these low price stocks. This one probably obviously has some troubles, or the stock wouldn't have fallen down here from in the last couple of years, 13 down to about $2. So however, you get these short squeezes, counter trend bounces. It's a tradable idea. And who knows, again, if there's a turnaround story fundamentally, maybe this one has a lot more upside to go. I just wanted to pass it along because it was on my watch list. It stood out from a technical point of view. But again, if I were to take this personally, I would do a little due diligence. Yahoo Finance, there's a lot of sources you can get information and see what's going on with the company, why it's down so much. SIG, Signet Jewelers, nice bullish falling wedge, broke out recently, but no follow through. Fairly impulsive breakout. The volume wasn't great. It was okay, and it's back testing the wedge, so it's objective there. You might want to see it. What I would prefer to do on this one is see it take out the recent highs where it broke out the other day. That should set it going if it can do that. So that would be, I'm not zeroing it in, but right there, that candle from the breakout day. My lines just moved. That was a high of 1855. So yeah, about over 1860 or so, and you can see these would be, that's my first resistance zone or target zone. So about 20, a little under 22. Next target there, a little under 2370, and possibly all the way up here. Depends what the market does. This is a luxury goods item. At the point where at the longest bull market, longest economic expansion in history, there's just not much life left in this market. I don't care what the Fed does. The economic indicators are already rolling over. That's why the Fed is easing. So, you don't see these kind of stocks do very well. So what I'm getting at, where I'm going, yes, I'm showing you a bullish setup, tactical trade, not strategic, meaning a short covering rally, short squeeze, bear market rally. If it pops, get a quick, if it pops above that 1860-ish level, hit it up here at about 22. That's about a 17% rally, and maybe get out and move on to the next one. That'd be my preference. And if you like the stock and you're bullish on the market long term, just raise your stop, set a trailing stop, and let your profits ride. Maybe you'll hit some of those additional targets if it does break out. GRUB. Grubhub, covered this one a while back. I was bullish earlier in the year on the internet and tech right here. It must have been about this point in time, that bullish falling wedge breakout. I did a video actually on all the internet content stocks, and quite a few really ran. And now it's come full circle again. So back then it was this bullish falling wedge pattern. The stock rallied off the bottom about 30%. This time around I'm watching this downtrend line right here. You can see it broke out, back tested, also took out the 73.33 resistance level, and it's kind of consolidating above there, the next resistance level up here. I'm not crazy about it, and again, if I was, it would be an official trade idea. PPOs looks like it's poised to make a bearish crossover at high levels, and this is a tech sector. I just think it's a game of musical chairs right now, playing tech stocks. That's my opinion. So I'll pass it along for those. I've been wrong before. I've been wrong in this market now for at least this time around several weeks now, if not a couple months, looking for the reversal. But we haven't really gone anywhere. Again, I covered that before. The S&P 500 is basically trading with the Dow where it was a year and a half ago. So we're just looking for the next leg down now, and that's where tech stocks are going to probably lead the way, as they usually do. So you got to be careful there. So again, it's a game of musical chairs. As long as the music's playing, you want to catch these momentum trades, get in them. As long as the Nasdaq's going up, this one should do well. And just don't stay too late to the party. Don't be the last one out when the party's over. All right, next one up, AVAV. Let's see here. Aero Environment, Aerospace and Defense. I have to update this chart. There it is. There's your divergence. It's just moving lower. It's in a downtrend. 0 buy signals, so no reason to step in here. Remember, divergence, positive divergence is not a buy signal. Oversold is not a buy signal, but there are indications of a likely trend change. You'd have to keep an eye on it for either a pretty solid candlestick reversal pattern or a break of the downtrend line, the bullish falling wedge here, and that would be, I'd give you a first target right there, and we'll go from there if this one happens to break out. All right, next one up would be BJRI. Looks like BJ's Restaurants breakout, back test of the wedge right there around the apex, and it still has a divergent low. Not crazy about it. I'm going to move on from that one, but there it is if you like it. TVIX is still on my radar. We stopped out on the last trade, but it's kind of holding its own where, I had that gap down recently. And again, the charts are constructive. There are 0, let me repeat, 0 buy signals. No buy signals on this at all. However, it's a setup. You can see the strong bullish divergence in place, just like right here. Wash, rinse, repeat stuff. Look for these divergent lows. Sometimes they extend. We had a divergent low there. It kept going. Finally, boom. That's probably 100-something% rally. At least well into the double digits. Right here, same story. Divergent low. Boom. Big rally. And that ended in a divergent high. And so at this point, you had a divergent low here. It's not as if it didn't play out. It did. I'll tell you how much that rally was. That was about where our stop was. That was a 75% rally. So the divergences worked, and then what happened, just like the stock market right now, went on to make it just simply extend. It didn't negate or burn through those divergences right here. This is what I'm talking about. You had the divergent low. The divergence is simply extended. What does that mean? Bigger the divergence, typically the bigger the move. That was a 70% rally. I think the next rally will measure into the triple digits. I have a high degree of confidence that it will. But we don't have the buy signal yet. And when we get it, one thing to watch here is this downtrend line as well. Just like back there, let me show you. See, we have this, like we had a wedge pattern here and a downtrend line to help confirm a breakout. We have the same thing right here, right now. There's 3 reactions so far. Maybe if we come up here, get another reaction on that trend line and around that 1850-ish area, that's resistance, and then boom, that could trigger a big buy signal as well. So on something like this, and I just want to say it, that you know, if it were to move up there, a lot of people sometimes, like the what was that pot stock I posted in the trading room yesterday, you know, some people, they don't want to take it was already up 15% at the time. I wouldn't have posted it being up 15% if I didn't think the setup could take off and go from there. So my point is, you have to be aware of what you're trading. If you're trading small pot stocks, you're trading TVIX. And what I want to say here is, let's just say all of a sudden the market starts correcting and TVIX rockets up about 20% in the next few days to get to this point. You might say, oh gosh, I'm not going to chase a stock that's up 20% in a few days or a week. Well, that would just get us to the breakout point. Again, set the stage. If you get the breakout, the buy signal, you're talking probably 170, maybe 200% upside potential, at least 100%. I'll tell you, at least to my first target from the previous trade, that's 57%. Second target, which I think is the has a very good chance of getting hit on the next big move up in the VIX. That's 120%, and that third target there is about 170% or so. So therefore, you know, if I'm not in this one for the first 20%, but then it breaks out, I have no problem entering at that point in time. Just wanted to mention that. So again, really, it's about knowing your stock. You know, I wouldn't chase Apple after a 18% move when it's overbought, but something like this, or you know, small obscure pot stock, no problem. NWHM, New Home Company, actually covered the home builders as a potential short, but like I say, you know, within any sector or the stock market, at most points in time, there's, you know, bullish and bearish stock setup. So I don't know exactly what they do. It says in residential construction, maybe they're a home builder. It sounds like it. Maybe they do some other aspect. Doesn't matter. The chart looks fairly constructive. So you can see you get the nice divergence down below. Positive divergence as the stock falls down here. It's fairly low priced, so be careful. I don't know whether I'd have to check the market cap on this one. Actually, I can tell you right now, it is a yeah, it's about a $95 million company, so that's definitely a small cap to almost maybe a micro cap company. But you have resistance right here. It's already hit my first target. It's been on my watch list. In fact, I had this watch list from before the breakout, so I probably should have covered that one later. There was a nice little pop there right into my first target. However, it's not too late. If it takes out this 481 level, whether it pulls back first or not, boom, my next target is this downtrend line, and if it takes that out, that would trigger an additional buy signal and take us up to that 553 target, and maybe all the way up here. The housing market or this stock. Let's just forget about the housing market. Let's focus on this stock's chart. Whatever they have going on, you know, has moved it off the bottom so far pretty nice. And again, it's a constructive chart. That's all I can say. We'll leave it at that. DBA. That's the ag ETF. I've mentioned this quite a bit in the past because I've been bullish on ag commodities, as you guys know, for for months now. And as I said, there's, you know, I'll sometimes hit and run in those that I like the best. Recently, that's been corn, coffee, for the most part, and what else? A couple others. But this is a kind of a one-size-fits-all. If you want to take a shotgun approach and you don't have the time or the effort to pick, you know, manage a portfolio of individual commodities, then you can take DBA, which, you know, it's moved up nice. And so, you know, while all eyes are on the stock market, I've been, you know, trading and watching a stealth rally in a lot of these commodities recently. And I think the risk reward is better. It's as simple as that. So you can see DBA broke out of this secondary downtrend line here, and you know, this is the next target. I don't see a hard buy signal here. In fact, you know, I just wanted to kind of update that one. It's more of a, you know, core holding within a longer term account if you want diversification. But again, if you have the time and inclination for it, we'll focus on, you know, the individual commodities in here, because as I mentioned, the problem with this one and diversification, just like the stock market, when you buy the S&P 500, you're buying 500 of the largest companies in the U.S. You're buying the best large cap, the best or the most bullish, I should say, within the top 500, and you're also buying the most bearish, because there's always stocks going up or down in the S&P 500. Same thing when you take a shotgun approach to commodities, because as I've said before, somebody asked me a while back and I was bearish on hogs. I didn't like hogs. I was bullish on ag commodities, but I didn't care for the hogs and cattle so much. Why? Because I was bullish on the grains. And what is a farmer's biggest cost to his to growing livestock? One of them, it's feeding the darn things. You gotta give them. You gotta buy these things: soybean, corn, wheat. You gotta feed your hogs and pigs and cows and all that. So there's an inverse correlation typically between the two. When grain prices are soaring, cattle prices typically or hogs are falling. Typically, not always, but that's usually the relationship there. So that's why it kind of counters out, and like I said, you tend to get more bang for your buck on these individual commodities, like we're swing trading now, Joe, which we've already hit our third target, and you can see, Joe so far in the last, 2 months has rallied about 30% or so. Wheat, I wanted to update that because this was an official trade. We got out right here, hit our final target. It went a little higher to where I had set that target below. I was being a little extra conservative. I told you guys I always set my price targets below the actual resistance level, and I had this level here, 594, because you could see that was nice resistance on the ETN. But I was also watching the future. So we got out, or we didn't leave a lot on the table, and then it hit that final, the actual resistance twice. Boom, boom, came back down, but we've come full circle here, and I think wheat is starting to look, I think it offers an objective long entry. Let me just not mix words here. We've pulled back to my former first target level that it was resistance before, and we had reaction since, and it should act as support. If it doesn't, you have support not much farther below right here. I would set a stop somewhat below there. So I may even add this one back as another swing trade for maybe the next leg up. But just wanted to point it out that it does look once again to offer an objective long entry or re-entry here for anybody that took profits. BAL is cotton. Cotton has a little work to be done. It's probably well, not probably. It's in a downtrend. There's no doubt about that. BALL is the ETF. I'll have to take a look at the futures. Potential divergence setting up. I mean, there's positive divergence in place now, but I want to see. It's not real clean at this point in time. Need to see a reversal. This may have been a selling climax. Let's watch that candle. Yesterday's big red candle. We had support right here, was holding above, and it fell through. So what will happen if this stock can jump back above that level? That would be pretty bullish, because that would be a bear trap. Watch capitulation, selling climax, call it what you want, and especially if we can get over this cluster of consolidation, that should open the door for a potential rally in cotton. Like I said, most of the other ag commodities are starting to move. This one hasn't, and it'll probably play catch up with the pack. Of course, cotton has very little to do with corn or coffee or anything like that. AIMT, passed this one along when I was on vacation, and it's stalled out, but I wanted to do an update because it's the bullish case is still certainly intact. You had this bullish falling wedge pattern, which we broke out of. Again, that was when I was down in Costa Rica, but pointed it out. I got it here right before the breakout. It broke out, and we ran right up to my first target. Slightly overshot it with a little momentum fueled overshoot. So that's a hit of resistance so far, a pullback, and a back test of the trend line would offer an objective entry, as would any move down, but not below this level. You can see that. Let me give you the number there. See all the recent consolidation down here. That's a pretty important support level. So on a pullback, it should hold there. And if it goes down there, it's going to take us underwater unless you took it before the breakout, which I don't forget where I put it. It was probably about right here, the day or two, couple days before the breakout. But so yeah, again, it's this one may and looks like it will offer an objective long entry on a back test of the trend line, but I wouldn't give it a lot of room I wouldn't give it a lot of room below that 1939 level, because that's pretty important support. Maybe if it takes that level out, it might punch through there, run the stops, you have a little final washout move, capitulation shakeout move. If so, and you get stopped out and it reverses and starts coming up impulsively, you can always re-enter it. This company has a drug and I think it's in phase 3 for peanut allergies. So there it is on AIMT. But like any trade, just don't get married to it. And by the way, as I said before, it is a biotech, and a small biotech without a diversified, very large diversified pipeline. So things go the other way on that peanut allergy drug for them, the bottom can fall out of this stock. So don't ever put too much. Keep your position sizes small in biotechs. The risk is very large, as is the reward. And to make up for that, take a fractional position size. So, if you're shooting for double, triple digit returns, which is common with a lot of these small biotechs, you need to be prepared for double digit losses on them. All right, I think that's it. Let me look the list over. That's it. That's all I had on my watch list. I'll hit on KHC because it's a swing trade plus a growth and income trade. It's still continued. It's been locked in after coming in with I think 3 pennies of the first target there on a couple occasions. Came real close there. It's kind of locked in this sideways trading range, but it's fine. It's a growth and income trade. It's paying us a dividend. It hasn't hit the first target yet, so I haven't officially raised the stop. If it falls down below this recent level of consolidation, there's a good chance it's going to go in for a backfill. So you may want to stop. If it backfills the gap, it should hold. So you may want to raise your stop at this point to protect profits to maybe a little bit above, or I'm sorry, a little below the bottom of that gap right there. But as of now, I don't see any reason to modify the trading plan on this one. So T1 remains 31.53, T2 remains 33.59, at which point, unless I officially extend it, that would be the final target, and we'll close the trade out. But if it can move on up, pop on through there, the downtrend line would be the next target. So again, whether I close the trade out officially or not, you like the trade, you're looking for, you like the nice dividend that stock pays, 8+%. You can hold out for those levels, just trail your stops on the way up, and remember this company has some accounting problems, and that's what's knocked it down so much. Maybe they're over, maybe they're not, well, who knows. So just don't go crazy on the position size, and never buy a stock solely for the dividend. I put on trades that are growth and income trade ideas. I fully expect, or not fully expect, but I wouldn't be surprised if that dividend's cut. And if it is, it's probably already priced into the stock. So let's hope so. We'll see. But again, it's only one piece of the pie. That's the key to investing. Don't put all your eggs in one basket. Don't put too much in any one stock, sector, index, etc. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.